Hello and welcome to FX Street Currency in Play, brought to you live from London. This is Core London or Core Finance London, and I am joined today by Steve Woodcock, who is Head of Trading at Terra Europe. How are you today, Steve?
I'm very well, thanks very much.
Good, good. Well, we were just talking off air. There's a lot going on in the markets. Usually we have a quiet summer where FX markets don't really do too much, but this summer feels slightly different. Just talk us through that.
Well, I think what we're seeing at the moment, obviously, I think the politics globally are impacting on the markets, and I think each day seems to gain strength in that perspective, and we're seeing different parts of the world, the US, Europe and UK. Actually, the UK's a tad quiet at the moment. That's a little bit worrying. The focus seems to have come off the UK. But Scaramucci and Macron and Volkswagen's fraudulent use of money and are giving us these moves that are fantastic, giving us opportunities to make money. And like I say, the markets aren't thin like a summer market. There's depth there at the moment, and it's nice to see actually. During, we're in the 1st of August. It's supposed to have gone away in May, but no, the markets are trading nicely, and long may it continue.
Yeah, so lots to look at for retail investors. So let's have a quick look at the headlines today and some key currency pairs. Well, dollar weakness persists. The dollar index it's selling off. You've already mentioned Scaramucci. Really, the dollar is out of favour now, and we could see interest rate hikes in the dollar in coming months, but nobody wants to own the dollar at the moment.
Well, I think the reason we're seeing that dollar weakness is purely because the interest rate hikes in the US people keep thinking that they're being put back. I still think we're seeing 1 September. That's what I'll stick to that. Some people seem to think after the last set of figures we had out that it's now pushed out to December. And the last the last clues we got seem to hint at that. But I'm still of the thought that we do see 2 rises this year, and I think it's September deck. I know they say they are data dependent, but they want to. They keep calling. They want to normalise. But what is normal now? It's and I don't want to say new normal because I'm fed up with hearing that term. But what is normal? And for me, I think that's why we're on the back foot with the dollar at the moment. I think as soon as those rate hikes kick in, I think we'll see a different market.
So those dollar shorts could be squeezed out quite quickly if there is
and I think there'll be a quick reversal of what we're seeing at the moment. But euro at the moment against the dollar is, as we can see now, euro dollar above 118. And I was sitting there last night when it actually went through 118. It was immediately 20 bid, and and stayed firm for the rest of the evening. Traded up to about 45. We've come in today. We were down at sort of 10ish, but it's holding up. It's holding up very well at the moment. But like we said earlier, the Scaramucci situation. Who I loved, by the way. I thought he was fantastic.
For 10 days.
Yeah. He's. That guy. He looked like if he was watching him, he looked like it was a film rather than actually newsreels. Because he looked like a character from a film. And I thought he was going to be extremely interesting, but we've no more of that.
So euro dollar, the move's 113, 14, 15, and as you rightly say, it moved up very rapidly through the 118 level. Do you think this is hard institutional buyers coming in to the euro, or is this a retail play that seems to be going
I think
through?
What we did, we broke out of that sort of 110, 113 and a half, 114 area. I think what we're seeing now is it's retail and professional market as well. I think we see, it trades the stops. That's what we did. We broke out of that range. What is the top end of this range? So I'm guessing, I'll be quite honest with you, 118.65 is a big number for me. So I'll be looking at what kind of price action we have if we make that. We got close to it last night, but I'm looking for, maybe the range to be now, 114 half, 115. Maybe we do trade towards 120, which is, if you like, as, a surprise to me. I didn't think we'd get back to these levels, but if you remember when we were back down at 106 and then all of a sudden there wasn't anybody saying that, you know, oh, hold on, this is going up. All of a sudden it's parity, yeah, which always, I'm a contra trader, and which said to me at that time, I came and said to Zach, I said, there was one day I sat in my room where there wasn't a buyer anywhere, which said to me, hold on a minute, well, where's the surprise, you know? So, but I've got to admit, I thought that was maybe just back to, you know, the top end of that range, and like I say, we've pushed on.
So to put you on the spot as a contra trader, would you be a seller for choice at these high levels? Or?
Yeah, between 118.65, 119.5. You know, I'd be looking to sell into the euro. Yeah.
Moving on to cable as well. Again, probably more driven by the dollar than sterling itself. Could it push higher to 134? Do you think?
It can be. Whilst we're still in this, and actually, by the way, it's extremely firm over the last 24 hours. When I walked in the office yesterday morning, sterling, there's a bid there somewhere, and it's continually being bought, and it's not coming off. It's not, which is quite. Although we're, like you say, although it's against the dollar, it's actually still performing. I know we're lower against the euro, but actually it's not performing bad at the moment. We're 112 in the sterling euro terms, which is, you know, it's performing okay. But yeah, we can push on. I mean, I said to Zach a few weeks ago, we've got 131.5. Obviously, if it goes anywhere near 135, I'm going to sell my house and sell it. Because we're in for a rough time in sterling. So
understood. And dollar yen again, kind of risk on, risk off, testing this 110 level, still within the 108.8 to 114.5 range. Do you feel this is a range bound currency?
It is range bound, and the reason we're at the bottom end is purely, as we said, it's dollar weakness. It's not so much yen strength. We do have days where the safe haven trade takes hold of it, but at the moment we're 110. We're just above 110. Okay, it may go 108.5, 107.5, but it's, you know, once those interest rate hikes kick in, there's only one way for dollar yen.
Okay, and let's have a look how the market is reading this, and from a position point of view, euro dollar a bit kind of almost 50-50 there. We've talked about dollar yen, short the dollar seems to be the market trend. Dollar CAD, it's been an interesting play of late, and certainly Aussie dollar seems a little bit quiet, and there. Long euro sterling. That's
yeah. Listen, do you know what that long euro sterling trade? I don't agree with. Yeah, because we're already seeing that Macron is losing some of his push.
Yes.
And you know, it's not going to be long before he fails in trying to change, you know, employment law and all this. And there's going to be a turnaround in euro sterling. But the trouble is, like I say, sterling's going to trade heavy. So we're probably, you know, we're in the range that probably euro sterling is going to probably remain in for some time, I would guess. But, you know, like I say, the euro problems will come. And that's when we see, you know, it'll probably tie in with the interest rate hikes, and that will give you the perfect scenario for a massive dollar rally.
So euro dollar's probably the pair to play if
I would say
in a month or two.
Yeah, that's right. Over the next 2 or 3 months, it is certainly going to be. There's going to be interest. It's going to be active, and there are going to be chances there to make money.
Fantastic. Well, let's have a look at the rest of the day and the economic calendar. A few things there to pick out. My probably pick would be the ISM manufacturing at 3 o'clock. That's the big one to look out for traders. But I think people, certainly sterling traders, will be looking at the MPC on Thursday with non-farm payrolls on Friday, with also some services PMI coming up.
Yeah, like you say, it's a payrolls week. We are all this stuff is by the by. You know, we're focusing, as you say, on Thursday for sterling. Interesting one as well. You know, I think numbers out of the UK aren't too bad. You know, we're looking okay. But like I say, it goes into Friday payrolls, and I hate payroll days. It does nothing all morning. We get half an hour of movement, and then everyone goes home. You know, so but I'm not a big fan of payroll days.
Well, we'll look forward to that on Friday. In the meantime, Steve Woodcock, thank you very much for joining us on the show today.
Thank you very much.